basically tell everybody in their learned opinion what they think the announcement is going to be. Well, invariably you have earnings announcement surprises, right? And, the company may say, well, hey, we didn't just make $1.10, we made $1.15, and more than that, next quarter we're probably going to blow away those estimates too. So that's an earnings surprise to the upside. And then, of course, the company may come out with its hat in its hand and say, well, gosh, guys, we didn't make $1.10. We only made 85 cents. We had huge problems this quarter, and next quarter is even going to be worse. So it's a big, big surprise to the downside. Well, in the Forex markets, there are similar events, but they're not earnings, they're economic announcements. And in the Forex, we're concerned with just a few of them. Some of them you may be familiar with if you've ever traded stocks or you've been around the stock market for a while. You've got non-farm payroll, retail sales, consumer sentiment, GDP, PPI, things like that. And believe me, I'll go into a lot more detail on exactly what those are and what they mean in the coming weeks. But just know this, that just like with earnings in the stock market, the Forex market will have a consensus of where they think the market is going to go. And the key to fundamental trading, the key to fundamental trading is being able to decipher what is a tradable move and what is not a tradable move. Because what happens in the Forex market is when the announcement comes out, there's an opportunity to make money. Because people were expecting, say for example, they were expecting non-farm payrolls to increase by 70,000 jobs. Okay, so that means 70,000 more people were added to the workforce. Let's say that 70,000 people were added to the workforce. So the U.S. economy is strengthening. It's bullish for the dollar. So the British pound, they're expecting it to go down. So that's the consensus. What happens if there were, say, 100,000 jobs added to the marketplace? What if there were only 20,000 jobs added to the marketplace? Each one of those is going to have an impact on the market, but we don't need to know how much. We don't need to get an economics degree to build our own consensus and forecast all of this stuff. All we need to know is what makes the biggest difference. We need to know what makes the biggest difference for the individual reports, and out of the 150 or 200 reports, there are really only about 15 that we need to be focused on. And then we need to know, how much of a difference is going to make us money. Once we narrow those two things down, you really can get into a place where, and I know this is going to sound incredible, but 90 to 95% of your trades are profitable with very little risk, and they happen like clockwork. Okay, so but there's a little bit more to this than just. There's more stuff to this than I could put into a video course, which is why I didn't put it in the kit. But all that stuff is going to be on the members area. So stick around. You're going to be able to see this stuff over the coming weeks. Now, that was a long way of introduction. We're going to cover this in a broad sense today. We're going to, of course, over the next few weeks, expand on this stuff. But for now, let's go take a look at some charts. Now that we've got a basic idea of what types of trading we're looking at here, and a basic idea from the last couple of seminars of what is going to move the market, I want to kind of fill in some of the ideas that I gave you the last time about how market makers work. And a lot of this is due to the feedback that I've gotten from members over the email and also during our phone conversations, because there's a little bit of confusion out there, I think. So what I want to do is talk specifically about how these orders are actually processed. And also I'm going to talk about